Hello again, everyone. Welcome back. In this weekend stock market update, we're going to take a look here at the ETF dashboard and see how everything ended for the week ending Friday, June 13th. And then we'll dive in and walk through the index ETFs, take a look at a couple of key indicators, and then look at the two ETFs that moved the most this, at least in the sectors, the S&P sectors, this last week. Okay, so here's the ETF dashboard. All the major indices were in the red, and the worst performer was the IWM, the Russell 2000, down 1.4%. So the Russell and the Dow Industrials are negative on the year. So the Dow's been kind of in and out of that, and then the Russell's always been leading to the downside, been the weakest all year long, still down 5.5%. The Q's, the leader of the upside, up 3%, still hanging in there. For now, we'll see what happens. This week, we only had 7 of the sectors positive and 9 negative. A little bit of a change from the last 2 weeks. The prior 2 weeks, we had 13 up and 3 down for 2 weeks in a row. A lot of strength kicking in, and all of a sudden we're getting some weakness here, especially at the tail end of the market of the week with what happened in the Middle East there with Israel and Iran. All year to date, we still have 11 sectors positive and 5 negative. This last week, the leader to the upside, energy up 5.6%. Big surge in WTI with what happened over there in the Middle East. Retail heading south, kind of leading most of the sectors, really. It's looking like the weakest, except for the home construction, which is really pretty bad. I mean, that's I don't know. I don't have words to describe how bad the home builders look right now. Industrials keeps hanging in there and leading, edging out utilities to the upside. It's up 8.3%. Okay, that's where we sit with the snapshot here at the end of the week, and I've got the Qs on the screen. Let me go back and start with the Dow Diamonds. Okay, down 768 on Friday. So after just kind of hanging in there this week, here's Monday, Tuesday, Wednesday, Thursday, slightly edging up, and then just like a bolt of lightning, boom, just crack right open on Friday. And just like on all the major indices, what happened on Friday took the week negative. Okay, down 557 on the week. The actual Dow Industrials were down 770 on Friday. Let's take a look at the SPY. Okay, so I'll come back to this, what I'm showing with this little red line. It was down 675 on Friday and down 214 for the week. Very tight week in here. Tightest range since the week of December 8th. So, I'm always paying attention to compression and expansion, and it seems like the market likes to cycle between compression and expansion, just like right here. Very, very compressed, very tight, and then it just, expands, uncoils, okay? So it's something to pay attention to, and it's interesting that we're getting it right where we're, at the top of this rally that's occurred since April 7th in here. We're getting divergence on several indicators. And this is tied into, so, it's kind of highlights the divergence that we're talking about. But I've got another indicator that's not shown on the screen that I want to compare that to. And I'm going to come back to that. Let's take a look at the Qs. Down 670 on Friday, same thing. We broke, everything was kind of, pushing higher and, ever so slightly, kind of a compressed week, just like right here. So we went all the way back. You got to go all the way back to November 24th to have a week that's tighter than the week that we just had. So same kind of thing. The Qs have done very, very well, higher highs every week, right? In here for 1, 2, 3, 4, 6, 8 weeks in a row, higher highs. Just keep pushing but now it looks like they're running out of steam, and at least for short term. So the real question, kind of like the title of the video, one gap or two? This little gap's already been closed. So when I look at this and I think, okay, what are we going to correct? Now this would be a pretty big correction to come all the way back down here. But this definitely is in target, but that's, like what, 491 on the Qs? If we come down and close this gap, we're talking 448. When I look at the Elliott Wave picture that I've got on here, let me go to the weekly view. Right now, let me adjust this. These are all just linked. Do not look at this and go, oh, Joe's projecting wave 3 at this position in this time. No, I'm not. The only one that I've actually labeling and say I think is done is wave 1. This is a target for wave 2 pulling back. So that's where I've got. I have moved to putting this as intermediate wave 4 with the low in April, because I know we had a zigzag for wave 2, right? A, B, C, big, bearish move down for wave 2. But we did get a flat in here, kind of a little bit of an expanded flat. So by definition of that, it's kind of a sideways move, although we had a very strong deep wave C. So I'm giving it the benefit of the doubt. And I don't consider the wave 4 ending at this low. It actually ended slightly higher than that right here with this candle, because I think it was a truncated fifth wave in here in this last move down, in this fifth wave right here. Okay, so the alternate is the W, what I had been holding as a WXY. I was looking at this thinking, well, maybe there's a decent chance that what we're going to get is a W, an X, and then a Y of some kind. Could be a triangle or whatever. That's still possible. I'm holding it as an alternate count, but right now I'm moving to saying wave 4 and working our way up with wave 1. And now I believe the fifth wave is done. Okay, so this looks to me, when I drill down and take a look at the 130-minute time frames and 65-minute time frames, etc., this looks like an ending diagonal pattern in here to me. We're getting really nice divergence for a fifth wave, which is, really nice. So now the question is, how far are we going to pull back? Let's just look at 2 versus 1. Well, a 38% retracement will close that first gap. So I think at a minimum, that's what we're looking at, 488. Okay. Now, to get all the way down here, that's a pretty substantial correction. That's going beyond 61.8, probably more like 2/3 correction. Don't know if we're going to get there. May not have to. I mean, you could still, once we hit here, then you got to look and say, well, here's the higher probability and possibilities. I would say this is the highest probability. This is a good possible range, because I always think about wave 2's 50 to 61.8% retracement. So we'll see what we get. But right now, it looks like it's taken the first step on its way down. So, and that old saying, stocks take the staircase up and the elevator down. So we'll see what we get here in the next couple of weeks. All right, let's take a look at IWM. And it was down 389 on Friday, 3 days in a row. Strong move down. 301 for the week, though. Okay, so I think this is starting its way down also. I'll talk about it more next week. Let's take a look at a couple of indicators. Let me scroll down here to my technical area. Okay, let's pull up the VIX. Let's look at the daily. Okay, so this popped up pretty nicely. It started to make the move on Thursday, and then, with the warnings about, Israel about to hit Iran, and then it happens, and then, you get the eruption and oil prices and everything. Not a bullish looking type candle, though, so we'll see what kind of follow through we get. It did close above that 20 level that everybody likes to look at and consider, volatility really kicking in when you get above 20, and that's where we sit at 20.82. Let's take a look at the high lows. So in the New York, on Friday, minus 13 in terms of the net between stocks hitting 52-week highs minus 52-week lows. So we flipped back into the negative for the first time in a couple of weeks, I believe. And when you look at the NASDAQ, this reading here at minus 67 is the lowest reading since April 21st. You got to go back over here. It's not clear, but it is lower than these readings here. So you got to go back to April 21st at minus 159. So we now have a kind of a pretty good little break here in the underneath the covers, the breadth, let's say. It's not by definition the breadth, but one of the components of the NASDAQ, and a sign of weakness going on in there. Okay, now when we go back to the S&P 500, taking a look at the percent of stocks above their 200-day moving average, we dropped 3.8 points to closing at 47.3%. So less than half the stocks are above their 50-day moving average. And we've got some divergence going on. And here's that divergence I was talking about. So just, we were looking at RSI. We were looking at DI plus, DI minus, and they're all showing divergence with this last leg, this last move in here. So if you go from the high May 19th to the high on Wednesday, which June 11th, and then go back down to this reading, that's what we're talking about right here, May 19th, June 11th, not confirming the strength of what's being shown in the index. So we'll see what kind of follow through we get. It does look like the moving averages are flipping over a little bit. Okay, the two ETFs that moved the most this week, energy and retail. Let's just take a quick look. XLE, let me give you daily and weekly. So up $1.51 on Friday. The interesting thing, this gap was closed right here. This gap was closed on May 13th. So we continue to push higher. It could very easily go right after this gap, come right up into this, 93 area or higher even. But I would say, my target would be like 93. And then it's like, where do we go from there? I mean, does it, you're going to run into some resistance in here. And then when you look at the weekly chart, we got, quite a bit of overhead resistance in here that it's going to have to fight its way through. Now, you get up here to 93, right here. That's where you're going to be running into that kind of resistance. What's the high here? 94.29, the high 94.82. So we'll see what happens with XLE. You just never know with what's happening in the Middle East. Now, the one showing a lot of weakness, retail XRT, down $1.82 on Friday, third day in a row, and pretty strong looking break, very significant divergence showing up on the indicators, and a very bearish engulfing weekly candle, down 298 for the week. So right now, this looks like it's at least started to the downside, and we'll see how far we go. Now we got a gap. It's all a matter of where do you define, where's the close here or is it here? I would say maybe 71 and a quarter, close that gap. That would be my first target, and also gets down to close to a 55-day moving average. So we'll see what kind of pullback we get here in XRT. Okay, that's it for this video and for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information, head on over to joehenches.net. Everyone have a great week. We'll talk to you on the next video.